was my income statement. So all the major line items which you can see here, we have covered that. You can go through this presentation in detail later, right? Similarly, on the balance sheet side, I have given all the explanations over here. Okay, yeah. So now this equity capital, just a sec. Yeah. Now these equity capitals or shareholder funds, this can also be called as book value or also called as book value. So basically, what is the book value of your equity? So whatever is the equity value here is the book value.
The amount coming from equity or the price of your share?
Price of the share is market price. That's the market value of your equity. And whatever is there in balance sheet, that is called as book value. So for example, in this case, 12,857 is the book value of your equity.
What reserves we saw Bajaj was last year was 21,000 something.
Right. That will be added.
That will be added to book value.
Exactly. So here you can see it is equity share capital plus reserves and surplus. The addition of these two is called as total shareholders fund, and this is called as your book value or net worth. Fine.
I mean, if we were to just look at it, what is the difference between book value and
Market value.
market cap? I mean, it's the
See.
amount which is trading outside.
Exactly. So this is the book value means the face value of your equity.
It's usually 2 rupees, 10
2 rupees, 10 rupees, and market value is the actual price of that value.
So market value can only help in the market valuation of that particular
Perfect.
company.
Yeah, it will help you only in.
Where can we use this book value?
I'll come to that. Whenever we use ratios, we need book value and we need market value as well.
Book value मतलब face value भी हो गया, face value into number of shares.
Exactly, exactly. Why have taken derivatives?
Options are
exactly. So here, do you see this face value? This is we are at Bajaj Auto stock, and now see this face value. Face value into your number of outstanding shares will give you book value.
And what is free float market cap?
We'll come to that as well. So suppose I have 100 stocks as outstanding. The total outstanding shares of Bajaj Auto is 100. Out of that 100, say 40% or 40 stock is owned by Mr. Bajaj himself. He is the promoter, right? That is held by Mr. Bajaj. Now, this particular promoter will not day in and day out sell his stake. He will not trade his stocks daily. So basically, this many shares are completely out of market because this is held by insider or promoters. So whatever is left after this, like 100 minus 40, that is free float market cap. So if someone has to take say 61% stake in Bajaj, he won't be able to take it from market. because
market has only 60 to get.
exactly the free float market cap is 60,
Okay.
but total market cap is 100. Now you got the difference.
So if Mr. Bajaj is not the only promoter, if there is suppose second highest
Huh.
promoter with 20% of
That's fine. So even he will come. So for example, he has 20 and the other person is say Mr. A, even he has 20. So obviously all these promoters, they don't, every day deal into equities. Huh? Every day they will not deal into trading. So even his stock will be deducted.
Okay.
So whatever is freely available in the market, we will take that. Some people take FII also into this. Depends on what kind of FII is investing. So it is subject to your understanding. But definitely promoter stakes we will exclude from that. So in this case, if I see what is the total market cap, have they given? They have not given total market cap. They have just given free float market cap only over here, which is 39,917 crores. Yeah.
And we cannot even identify how much percentage this is of the total market.
No. So that you will get from your shareholding.
Money control पे है और NSE पे नहीं है.
NSE पे it will be there. It will be there in the equities page or BSCK page. I normally don't refer to that generally. So if I look at this thing, Bajaj Auto, last price is this. Where is market cap? Have they given market cap? Yeah, this is the total market cap. 88,675 crores. Total market cap of Bajaj Auto. Free float market cap is just 39,000 or 40,000 crores. Means roughly 50% stake is with promoters. Right? Let us see. कहाँ गया? बहुत सारा. I'll close the other tabs which we are not using. Shareholding. Yeah. Look at this.
So promoters have also increased the amount they have. Now, okay, now just comparing,
Yeah.
हमने जो lunch के पहले
Right.
P&L और balance sheet वगैरह सब देखा.
Right.
It was showing that the company was in much of the loss in trying to pay back the money. It had taken from.
Yeah, basically, in business, it was seeing that they don't require investments. That's why they were repaying back to the equity shareholders.
Or sales or profit भी कम होते
Exactly.
जा रहे. So in that scenario,
Hmm.
plus the place where promoters have increased about 4% of their stake.
Right.
How do we analyze कि मतलब अभी promoter ने पैसा डालना is good or bad or.
See, definitely, if promoter is increasing his stake, it seems good. Means promoter is more sound, and he is liking his particular business. Now, obviously, we need to understand the full business cycle as a whole. Just by looking at the statement, whatever analysis we did, we can't come to a conclusion. But in short, if promoter is holding stake and if he is regularly increasing the stake, so that means from market liquidity will run out. Earlier, only 49.3% was the insider holding. Now it has increased to 53. So from your free float market cap, that much quantity has come down. So it depends from which angle you are looking at. As a retail investor, I feel it's good because people will not be able to manipulate much. FIIs will be there, but still I give more weightage to promoter because promoter has more confidence in his business. For FII, they will think reverse way. Okay, now promoters are increasing their stake. So free float will come down. If free float is coming down, there won't be much liquidity in the market. If there is no much liquidity, it would be difficult for them to buy and sell because their slippage cost will be higher when there is no liquidity. So it depends. So some FIs they will also feel okay, no promoter is increasing their stake, which is good. So it depends. Like there is no straight answer to this.
Slippage cost.
For example, even if I buy say 100 shares, my own demand will raise the share price by 1 rupee or 2 rupees. So there is no one else demanding this stock right now. If I myself I am going to buy that many stocks, it will create a huge demand, and because of that prices will increase.
How they will know you are going to buy?
No, obviously now suppose there is some free float available in the market. If of that free float, every day, whatever average number of trades will happen in that particular stock.
Okay.
See, out of 100 stocks outstanding, average trading will be happening in 10-15 stocks, the average volume. Now, if every day I trade 50 to 60% of that volume, obviously I know that my own demand or my own supply will change the prices.
मतलब जिन जो बहुत पैसा literally pump into.
Exactly. This particular line item is very important. Pledged. What it says is that promoters, whatever stake they have, and whether they have pledged this stake with any banks or with any lending institution. For example, suppose they need capital normally. So what promoters do, they will pledge their shares against some lending company, against some bank. They will borrow the money and they will invest that money in a business or anywhere for whatever purpose, but majorly it will be for business purpose. This is termed as little negative. This is termed little negative because what has happened is like most of the cases promoters have pledged and then company has gone bankrupt. Now as a promoter I was liable to pay those shares to you. I paid. Now market value of those shares have fallen. I can't do anything.
No, can you give example?
I'll give you example. For example, I am owner of Bajaj Auto. I am owning 53% stake in that. Market value is say 3,000 rupees. I am owner of certain amount, say 20,000 crore or 30,000 crores. You are a bank. I come to you. I tell you, I'll pledge my shares with you. Means I'll make you give these shares to you. That means I can't sell these shares in the market because these shares are pledged by you. So now, as long as I don't repay you your money, you have the delivery of that shares. I am the owner, but I have kept it as a delivery with you. So I can't go and sell in the market. I have taken loan from you now. I have used this loan for a business purpose or whatever purpose. If tomorrow, if company is not doing well, market price of the stock from 3,000, it goes to 100 rupees. I go bankrupt. What I tell you, see, I have given you my shares. Take those shares. That was our contract. So ultimately, who is in loss? You. I have given my shares to you. Take it and sell it. But when at the time when I took that pledge, when I had given that pledge, market price was 3,000 rupees, and right now market price is 100 rupees. So ultimately, you are the loser. So this is how people link to the pledged shares.
But when they create pledge,
Yeah,
and for business purpose, ideally they create. So they put the money back into the same company or other business.
it depends. It depends. It can be for some other business as well. So it totally depends on the negotiation between the buyer and lender.
I guess वो WeWork में हुआ था ना. WeWork.
Yes, bank
Okay, you want to take example of Yes Bank? Let's see what is their pledge shares. So in this case it is 0, so which is good. Yes
अभी
bank.
तो उसका सब stake sale हो गया ना,
Let's see.
मतलब निकल निकल के हाँ पास
If you know examples of, I know example of Jet Airways where his promoter, they had pledged the share, and right now you know what is the case of that shareholding. Look at this pledged. Now I have not seen the what exactly is the case, but can you see?
What made Yes Bank
Yeah,
pledge 35 to 40% in September and August because it was in so much crisis?
exactly. So definitely, you know, when you are in crisis, you need to repay money to your lenders or whatever, XYZ, whatever. So ultimately, what promoters will do, they will pledge their shares, they will get the money, and they will distribute that money either to lenders or if it is required for capex purpose. Not for capex, generally they do that, but majorly whenever it is in crisis, that means they are doing something, such kind of activity. But not 100% of the times, but whenever any promoter is pledging the shares, it is generally considered a little negative. Not 100% of the time, but it is generally considered. Okay, now, yeah, FIIs have 14 to 15% stake, which is constant. DIIs have 16% stake, which is constant. And this is the holding, the breakup of DII, I guess. Yeah. So this is the shareholding. So normally this is also very important. Now, I guess SEBI has restricted promoters' holding in each company. They have asked promoter holding to bring them to 65 or less than 65.
75, but it was that rule was come okay, to 65, but after few years it will be implemented.
Exactly. So
Currently it's 70.
sometimes what happens, too much of promoter stake. Like for example, in some companies, if promoters are holding more than 90%, then you know ultimately what will happen, promoters interest will be to increase share prices at whatever cost, because 90% of the company is owned by me. If share prices increases, ultimately I'll be the benefit. So normally promoters used to indulge into all these activities, you know, which are like not professional. So that's why, you know, SEBI has come with a circulation where now promoters need to decrease their stake to 75%, and from 75, I guess they want to reduce it to 65 or even lower than that, probably
65 or
65. Yeah, okay. Yeah. So this is about shareholding. Yeah. So this is the net worth or book value. Now, when I divide this book value with number of outstanding shares, I will get book value per share.
Which is face value.
Which will be face value. So even I can tell this is face value, and if I divide this face value with this thing, so it will be face value divided by number of outstanding shares.
But what is it going to give you? मतलब what decimals में value होगा?
So what will it help me in finding out earning per share? For example,
अच्छा
yeah,
जहाँ जो डिविडेंड है और बाकी जितने भी अर्निंग्स रहते हैं वो फेस वैल्यू पे दिए जाते हैं नॉट मार्केट वैल्यू
not market value pay,
हाँ
outstanding. So now where we had ended was year, net profit and loss for the period, right? We had ended here. This is fine, this is fine, this is fine. What is this EPS? Earning per share. Concentrate on diluted EPS because basic and diluted mein there is a difference. I'll explain it sometime later, not needed right now, but we'll focus only on diluted one. This is the most important. What it is? It is your net profit divided by outstanding shares. So if I see net profit over the years per share has come down, just in case of this particular company. I don't know about Bajaj Auto. What is the case? Income statement, income statement. Whether they have given.
Excuse me.
Yeah. See here.
Hello.
In case of Bajaj Auto, their EPS has increased, which is good. That means per share wise, your earnings is increasing. Yeah. So earlier it was 97 rupees in 2015.
But per share 97 rupees कैसे हो सकता है?
Your net profit divided by your outstanding shares. Your this row divided by your outstanding shares will give you this line item.
Diluted EPS. Diluted EPS. मतलब कुछ होता नहीं है ना different diluted.
There is the definition, but at this point of time, it's okay to skip that. Just understand EPS.
EPS is equal to total profit.
Profit after tax divided by outstanding shares. Rest all is covered in this thing. Fine. This is the cash flow statement.
Working capital considering current assets is cash accounts is
Here, right now, we will cover working capital. Working capital is nothing but your current assets minus current liabilities.
which leaves cash in hand.
Exactly. So, for example, if suppose in our case, working capital would be inventory and debtors. I normally leave cash because cash is something which is used in business. So we will use working capital as inventory and debtors
Okay.
and whatever other current assets we have.
But working capital means something which needs to be used in the business, right?
Exactly.
So we can use cash also. We can
See, cash normally you will normally keep extra cash with you as a business, right? Even like today in your savings account, there will be little more than whatever is required.
Mhm.
So obviously, it will depend on business to business. So that's why, that is not core working capital. What is core working capital? Your inventory, debtors, your payables. Those are your core working capital, right? Some people use it, some people don't use it, but it's okay, it's fine. Not a big deal. What is your core working capital? We discussed that. What is then core working capital cycle? Where is your capital block? A, inventory, B, debtors,
Mhm.
and C, creditors from whom you get goods and you pay it later. So that's the benefit.
Okay. Yes. Debtors from whom I'm expecting money back.
Exactly. There your funds are blocked. Inventory, your fund is blocked,
Yes.
and credit payables where you get inventories or whatever raw materials in credit.
But there I have to pay back. So that's
There you
why
have to pay back. So that is your core working capital cycle.
Mhm.
Lower the working capital cycle, it is good for business.
Lower the working capital cycle.
Yeah. For example, can you see this inventory days?
Huh.
If inventory days for one company is say 10 days, for other company it is 100 days. Means for the first company, inventory is only there for 10 days. After that, it is sold. For the other company, inventory is for 100 days and then it is sold. So which one is good?
10.
10 days. Receivable days, can you see?
Hmm.
Receivable days, what is say and how many days it takes to convert your credit sales into cash.
Okay.
Suppose today I sold some good
Hmm.
on credit. If I am giving you 30 days ka credit, and another business is giving you 60 days ka credit. Which business is good?
30 days.
30 days. So that means if inventory days are less and receivable days are less, it is good. Your lower capital will be blocked.
So receivable days includes debtors amount that you
Debtors amount, exactly, because that you have to get it from your debtors. So your capital is blocked for lower amount, for lower tenure. Hence your turnover will be faster or higher. Minus your payable days. Now payable days is something which you need to pay to your creditor. Suppose you have to pay in one case in 30 days and in another case you have to pay in 60 days. Which one is good? You have to pay.
I have to pay.
We use credit card. Major benefit of credit card is we get that 50 days ka credit with zero interest. That's why we prefer credit card over cash. This is the same thing. As a business, I want to take maximum credit days. So if my inventory days has to be lower, my receivable days has to be lower, and my payable days has to be higher. So the lower the working capital cycle, it is good for business. Now that's it. Investing we covered, cash flow from financing we covered. These three line items I will cover later. Free cash flows to equity, free cash flows to firm. Fine. Now let's come to ratio analysis. So the first type of ratio analysis is efficiency ratio. Efficiency means how efficiently you are using your assets. Be it current assets, be it fixed assets. Right? The higher efficiently you use, it is good for the business. Let's take a look at total asset turnover first. The formula for this is revenue for the period divided by total assets. Forget average as of now. No need to worry about average. Let's take example in this case. Total assets is 10 lakhs, right? And my sales is what? 10 lakhs. So if I do division of both is equal to 10 lakhs divided by 10 lakhs, 1, 1. But imagine if there is another business with the same total assets and everything, he is able to generate sales of 12 lakhs. So what is his turnover ratio? 1.2. So which one is good?
Obviously, the second
The second one is good.
is more efficient.
He is more efficient. Basically, whatever assets he have deployed, he is able to make a good turnover of that. So efficiency ratio is like, higher is good for the business. Second type of ratio is fixed assets turnover ratio. Again, it is nothing. Instead of total assets, we will take fixed assets. But whenever someone talks about turnover ratio or efficiency ratio, it is like turnover with regards to your sales. So your numerator will be sales and denominator will be that particular line item. If I am looking at total assets, it will be denominator will be total assets. If I am looking at fixed assets, denominator will be fixed assets. And higher the turnover, it is good for the company. Right? Working capital we discussed. It is current assets minus current liabilities. Some people reduce cash from that. It's okay. There is no scientific formula for this thing. Depends from business to business and analyst to analyst as well. Working capital turnover is again nothing but revenue. Your fixed denominator is working capital. What is working capital? Current assets minus current liabilities. Higher the ratio, I'll give you this PPT. I'll give you this PPT. So higher the ratio, it is good for business. Now we'll come to receivable turnover ratio. This turnover. The various receivables I have not written over here. Okay, that's fine. Receivable turnover. Again, it is same thing. Receivable is on what? Revenues. Revenues divided by your receivables. So for example, let's do this particular example. 10 lakhs was my sales. You need 10s, 100,000, that's 1 lakh. 10 lakh is my sales. This is my sales, right? My receivables is say 2 lakhs. What is my turnover now? Sales divided by 2 lakhs. 5 times. Receivable turnover.
Receivables on the sales. So basically, these are the total number of people you're expecting. Their
No, so
debtors.
on an average, my receivables is like churning 5 times.
But if
Yeah.
sales, out of the sales, there are going to be few people who are going to act as receivables. Let's suppose say
Right.
if you sold 5 products,
Exactly.
two paid you, 3 did not pay you.
Exactly.
3 goes out in receivables.
Right. We'll come to this. Now, imagine another business. Receivable is 1 lakh. Look at the turnover 10. What I said, whenever turnover is higher, it is good. So in this case, look at the receivables. It is 2 lakhs, means 20% of my sales is in credit. And in this case, 10% is in credit. Hence, because here my credit sales is higher, my turnover is lower. And that's why here turnover is higher. Now I will convert this into days. What we discussed here. Yeah, this thing. I have to convert this into days. Inventory days, receivable days, and payable days. Okay. So now we are talking about receivable. My receivable turnover for first company is 5. My second company is 10. How many number of days we have in a year? 365. 365. I will divide this by days. 365 divided by 5 means on an average in every 73 days I am getting my money back. And in this case I am getting back in every 36 days. So which company is better? This company is better. I am getting my money back in 36 days. In this case I am getting in 73 days. And why? Because my turnover is higher. Higher the turnover, it is good. Perfect. Now let's look at other line item, which is inventory turnover. Now inventory, your sales figure includes your profit margin. over and above your cost. From receivables, from your debtors, you will take the sales figure, right? But what is your actual cost? COGS. COGS is what? Your cost of manufacturing, right? So whatever inventory you have, hence the numerator for inventory will be COGS, because you are not charging any premium or profit margin on inventory, right? To debtor you are charging the profit. That's why their numerator is revenue. But for inventory, it will be COGS, because your inventory, what is the cost of that inventory, of converting that inventory into a product? COGS will tell you. So that's why your numerator is COGS in inventory. Similarly, for your payables means from people from whom you have taken the raw materials on credit. So you have taken raw materials on credit and you will convert that raw materials into finished goods. So hence you will again take COGS. Higher the turnover, which is good. So let's take this. This we have done. Now what is my COGS? What is my COGS? 1 lakh rupees. What is my inventory? Suppose your inventory is say 50,000 and your inventory is say 25,000. Which company is good as per you? 25,000, right? What is my turnover? Inventory turnover 1 lakh divided by 50,000. 2 times.
COGS तो denominator में है.
नहीं इसमें आएगा न्यूमरेटर. COGS will be in numerator.
Okay.
Instead of revenue, it will come COGS, because revenue you are charging from debtor. So you will charge your profit margin on that.
Yes.
Perfect. So that's why it is revenue. But on COGS, but on inventory and on your payables, you will not charge any profit margin. You will find what is the cost of goods, right? So that's why.
Manish, just a second.
Yeah.
Pause करना.
So Jay, your query was why are we taking COGS in the numerator, right? So in receivables, we are getting these receivables from debtors. So actually when we sell it to debtors, we sell it at the sale price. So that is the sales that we get from the debtors. But in inventory and in payable, inventory is on raw materials. So you have to find out what is the cost of raw material, converting raw material into a finished goods. So hence your numerator is COGS. Right? So coming back to our example, what is my inventory turnover over here? 1 lakh divided by 50,000 2 times. And here it is 4 times. Again, higher the turnover, which is good for the company. Now if I convert this into inventory days, what it will be? 365 here. There are 365 days. So on an average, my inventory is getting converted into finished goods or it is getting sold in 182 days here in case 1 and 92 days in case 2. So obviously this is good because my capital is blocked for lesser period, right? Inventory days. Perfect. Now we will come to payables. Suppose this company has payables of 40,000. Let's take 40,000. And this company has say 30,000. My numerator will remain same. It will be COGS. What is my turnover? 2.5 year and 3.3 years. Now in this case it will be little reverse because we are paying to the creditor. So we need more time. If we are taking more time and creditor is giving us more time, it is good for business because we can utilize that money for a different purpose, right? So this is my turnover, payable turnover, payable turnover, average number of days 365. What is the payable days? 365 divided by 2.5 and this is 109 payable days. So in this case, scenario 1 is good because you are paying on an average in 146 days to your creditor. Whereas in case 2, you are paying in 109 days or 110 days. So obviously here you are getting additional some 25 days or 30 days extra, which you can utilize this money, right? So now coming back to our working capital cycle, it is receivable days plus your inventory days minus your payable days. Let's see for company case 2, 18 days. So lower the cycle, it is good for the company. So working capital cycle in case B is good as compared to in case A.
Okay, can you go towards the receivable?
In case 2, receivables is good because we are getting this receivables in 36 days. And also inventory is good because our inventory is getting sold in 91 days on an average. And on an average, we are paying back to our creditors in 109 days. So working capital cycle is lower in this particular case, so which is good for us, right? Can company have negative working capital cycle? Means this is positive 18. Can it have minus 18?
Can we when payable days are like very, very high?
Or in fact, companies like completely selling things on cash basis. This is say 0. Take example of say DMart. Majority of their sales will be in cash. And obviously whatever raw materials or whatever goods they are getting would be on some credit at least 10-15 days ka credit. So that means
उनका inventory days थोड़ा रहेगा ना.
inventory days would be there. It would be there. But still, at least majorly they are working on cash basis.
Receivable.
Hardly 10% or 5% of the sales would be on credit. As long as I know, they don't give on credit. They give demand, not at all, na?
Demand is pure cash because retail business.
Exactly.
But we don't get credit right from demand. At best, we'll get a credit from an HDFC bank or a Bajaj Finance who is financing that purchase.
So,
Demand per se is not.
so that means ultimately they are using payables, that money, to do their business, which is really good. They're not putting in their money at all for doing the working capital business, not for running the business completely. Right? For certain IT companies, I don't think they'll have any inventory that much. Max to max, they will be having would be that conversion cycle, converting the project into a revenue. Max to max, they will have that much. Yeah. So for IT companies, for retail companies, normally your working capital cycle would be negative. But for infra companies or capital goods companies, your working capital cycle will be huge. So whenever you are doing such analysis, you have to look at industry standards as well. You can't look at DMart and you can't look at Reliance Infra and tell कि नहीं उसका working capital cycle is good. That's why I will buy DMart. We can't do that. You have to compare apples to apples. Fine. So yeah, we discussed about total asset turnover, fixed asset turnover, working capital we discussed, working capital turnover we discussed. Right? This is about efficiency ratio. Again, just remember one thing in mind. Efficiency ratio is kind of a turnover ratio. Higher the ratio, it is good for company. That means they are utilizing their assets or their resources very well. Next, we come to liquidity ratio. In liquidity ratio, we have two types of ratio, which is current ratio and quick ratio. Your current ratio is current assets by current liabilities. So for example, in this case, I have not written all the current assets and liabilities, but for example, suppose this is something, let's take any random figure. This is 20,000. Payables is say 1 lakh. These all are my current assets because they are used for in the business within 1 year. So I will do addition of all these three. This is my current assets. And this is my current liability. So what this ratio tells us, it current ratio is your current assets by current liabilities. Sorry.
Higher.
Huh. So what it says that for every 1 rupee liability that you have 5 rupees and 20 paise of assets, which means you are able to pay your current liabilities with your current assets easily. Which is good. If this ratio is somewhere close to 0.5, it means that your liability is more as compared to your current assets. That means somewhere down the line there is some issue with your working capital. Either you have to reduce your liability somewhere, or you'll have to bring in more cash, or you have to reduce inventory or debtors. Means your working capital cycle is not good whenever your ratio is less than 1.
Any specific range
approximately
like
two
ये
times.
sector के लिए ये sector.
Sector wise it will be different, but approximately we assume that it has to be two times.
Least में one. जितना liabilities है उतना तो assets होना चाहिए
Minimum
at least.
you should have, and on an average normally company keep it as two. This is when we used to do MBA. At that time two was the ratio. Now I don't know if it has changed or not.
But one beyond one is 1.5 के ऊपर is comfortable. At least the least you would need is one. This is one question here. In what circumstance will it be less than one? Can you think of it?
When the company is not having
Example
any assets,
of
but
which
it
is
keeps on borrowing and borrowing.
There is no borrowing, right?
It's
See, it is just these three
Payables,
things.
it's payables.
It is supposed to pay.
So think of it. One example which Manish gave. Company is actually very efficient. Okay. There are no receivables. He does business on cash. But at the same time, my vendors, they are giving me 30 days credit.
Mhm.
In that case, the current ratio could be less than one. So you will have to think of it from a qualitative perspective also. How, whether that makes sense or no. Just reading point 5 and thrashing it in the dustbin that this company is not solvent or this company has issues may not be the right approach as what I'm trying to say.
See, obviously, you need to think on each and every aspect. As since morning we were discussing that, if sales is going down, we have to understand why it is going down. What are the reasons it is going down? Whether the reasons are temporary or it's a permanently, like, because of some big problem with the sales are coming down. Each and every line item you will have to, come to a proper justification. Then only you can understand what exactly is going on with the company. Otherwise, it's a gigo, garbage in and garbage out kind of thing. The other ratio is quick ratio. Quick ratio is nothing but your cash plus your receivables plus your current investments. You are not including your debtors divided by your current liabilities. So basically, cash is liquid. It's like you can easily take it from bank right now. Inventory, obviously, if I go in the market and want to sell this inventory, will I be able to sell this inventory fast? Suppose someone is like we were doing example of Bajaj Auto. If they are like manufacturing scooters, can they sell the scooters directly and in a day? Not possible. Same thing with debtors. But with debtors, at least you can go to bank. You can tell the bank, okay, I have this debtors. The quality of this debtor is like that. Still, bank will take some time. So, what is your quick asset in this? Cash, some investments which you will have. Like in case of Bajaj Auto, we saw they had current investments, some 1700 crores or 1500 crores. That's their quick assets. So, your quick ratio will be your quick assets, which is your cash and your investments divided by your current liability. Which in this case it will be 3 lakhs divided by 1 lakh. Obviously it is 3 in this case, but normally it will be somewhere in the range of 0.3 to 0.5. So at least 50% of your current liabilities you are able to fulfill immediately in case there is any problem. Right? Moving on to next. These are the main ratios. Debt to equity ratio, and where is your debt to EBITDA? Oh, yeah. Your debt to EBITDA ratio. Here, when we took example of starting a company, wherein we took loan from bank, we took loan of 8 lakhs from bank, and our capital was 2 lakhs, right? So while seeing the fundamental of the company and looking at the leverage ratio, so I need to understand for every rupee which a promoter is putting, what is the leverage that he has taken. So in this case, what is debt? 8 lakhs. What is promoter putting in? 2 lakhs. This is 4 times. Means for every 1 rupee promoter has put, he has taken 4 rupee as loan. Now whether as a business it makes sense or not, you need to understand that. Higher the amount of loan you take, higher is the risk, higher will be your interest expense, your obligations will be higher. If at all there is any downturn in the market and you are not able to sell your product, A, your margins would get affected. Second, your obligations would get affected. If at all you are not able to pay this, then you know what will happen. So in India right now, most of the companies, telecom companies, companies, power companies, these companies are facing this issue. The debt to equity is quite some high and they are unable to fulfill their obligations every year. Right? The second most important ratio here in leverage is debt to EBITDA. So I need to understand what is the real earning of the company and whether from that real earning can they service their debt or not. Right? Here we arrived at EBITDA. It was some 10 lakhs 80,000, which is quite some. Suppose this is 1 lakh. What is the loan?
8 lakhs.
So what is my debt by EBITDA? 8 times. EBITDA we discussed. It is the real earning of the company because we add back non-cash expenses. And this is the real earning potential of the company. So after EBITDA, look at this. After EBITDA, we have just depreciation and amortization. This can be changed by the company according to their policy, whether they want to have a straight line method or a written down value method. After DNA, directly we have interest. We don't have any other line item in between. So that means whatever amount the EBITDA is there, the full amount can be used to service our debt. So that is why this ratio is very important. Now this ratio currently in our case it is 8 times. Normally it will be 3 times, 4 times, depends on industry to industry. A very capital intensive industry, your debt to EBITDA ratio will be very high. But for a retail industry, your debt to EBITDA will be low. Like in case of Bajaj Auto, we saw there is no debt at all. So debt to EBITDA will be 0 because they don't have any debt in the balance sheet. Right. So do you use any other ratio in financial leverage?
DSCRs.
DSCR, do you use that still? Okay. We normally don't use that in our valuation or this thing.
Not from what perspective you're looking at
Okay.
will make a difference. If you're looking at it from a debt coverage ratio perspective.
Right. Looking at
As a
the
lender
interest expense, whether
perspective,
they
lender
are
perspective.
exactly. So there are other ratios also. As an investor or as a potential, we are looking from an point of view where we are taking stake in that company. So I would not be interested in taking, what the day-to-day operations are there of a company or kind of thing. What generally we see is like, whenever we are taking over a company, we generally look at debt to EBITDA of that company. And if that is in particular range, we understand that okay, if company is unable to meet its day-to-day obligations, then as an equity investor, I will just see that their debt EBITDA ratio is in good range. If this is like completely off, like 8 times or 10 times, then I know that I should not at least go into that company. But if debt to EBITDA is in proper range, then I know there is some mismatch in the operations of the company. I can buy this company and I can, change the operations accordingly. My obligations will be met properly. This is how we use it.
So this depends on perspective.
Exactly.
If I'm looking at it, lending money to somebody,
Right.
okay, at that point I want to know. See, today's EBITDA, for example, could be 100 rupees,
Right.
and he has a debt of 300 rupees.
Hmm.
Okay, but if that, how perspective will change is if the loan tenure is for 5 years, that 300 rupees debt he'll have to pay say 60 rupees over 5 years. But if the loan tenure was say 2 years, okay, he'll have to pay 150 rupees principal in each year. And if he's making only 100 rupees EBITDA, then servicing that 300 rupee loan becomes difficult. So where DSCR will come into play, it will factor the time horizon.
Time horizon,
That's
exactly.
the only benefit beyond the debt by EBITDA.
So these are the leverage ratios that generally we look at. Normally, if you see, you will come to know that industry to industry these ratios are different. Like for a retail industry, if your leverage generally I say debt to EBITDA. Normally we use that as a terminology. If it is very high, 8 times or 9 times, then I definitely know there is something wrong. You tell me why a retail company would require that amount of debt to run his business. So that means he is either over leveraging the borrowings, or else he is like, keeping these funds for something else reason. But your debt to EBITDA can't be that high for particular industry. Say for IT industry. You tell me for IT industry, why would they need debt that much? But for a capital intensive industry like an infra company or a power company, obviously they would require that amount of debt because the business gestation period is so high that obviously no long term equity investor would invest for that. Like for some companies, just to break even, they take minimum 5 to 6 years. Even for some companies, it is higher. So definitely for 5 years, if you are not even break even, you're not able to break even. So obviously your borrowings will keep on increasing. Your EBITDA generation would be lower. That's why your leverage will be higher. So it depends from industry to industry as well. Right?
You know what's the debt by EBITDA of Vodafone Idea? Yes.
EBITDA there I guess negative EBITDA ना?
EBITDA positive है.
अभी भी है? Oh great.
20 plus. And that's why they are where they are. People talk about bankruptcy. So that makes
But
you
looking at the amount of dues, their EBITDA sounds to be good enough. Sounds to be good enough, even though it's about.
No, I guess currently that see,
amount भी अच्छा.
looking at the Vodafone Idea right now, whatever amount which is due, it is not included in their balance sheet.
Oh, okay.
They are not including,
Okay.
but as an analyst, I will include that. If I include that, I guess ratio will shoot to more than 30-35 times,
debt by EBITDA is 20 plus, 25, 26.
including the AGR amount which is due.
Not the ACR.
Huh.
This is the spectrum usage charges and the debt on their books.
Exactly. So right now, whatever the amount they have to pay, Airtel has to pay 35,000 crores and Vodafone 1 lakh crores. If we add that to their debt,
They're gone. See, the thing there is that is not something which they can pay over a period of time. For the Supreme Court verdict, they have to pay today. So cash in.
No.
So unless they get some relaxation from the
no,
government,
but they got na that the government will give them soft loan na.
वो अभी बातें चल रही है.
Huh.
Don't know
So
where
as
they
in,
go.
so what we do is normally what we see. See, we value company as a going concern. So what we will see, okay, everything will go good. Whatever amount that they have to be paid, the company will get loan on that. So we will include that in the debt of the company.
And we charge interest and fee.
Exactly. So on that basis, with the current debt to EBITDA, what you are talking is 20, we will say it will go up to 30, 35 times. So obviously, no investor would come and invest in this company.
But just one minute point here. Think of it from a telecom analyst perspective. Okay? You may feel that Vodafone Idea is having 25 times debt by EBITDA. But recently, if you observed, in the month of December, all telecom companies raised their prices by 20%. They still plan to raise it by another 20%. Imagine if a 50% jump in the revenue comes, expense कुछ बढ़ेगा इससे? कोई नया कस्टमर तो आ नहीं रहा है, मैं कुछ सेल करने नहीं जा रहा हूँ. That ideally 80-90% of that has to get added into the EBITDA. So EBITDA अगर 100 रुपया था ना तो सीधा 200-300 दिखेगा. It will shoot up like 2-3 times because of operating leverage. Variable cost कुछ है ही नहीं.
Yeah.
जो भी है सीधा प्रॉफिट में आएगा. So maybe if you project it for next year, if you say that 100 rupee revenue reached at 140 rupees, against which you are making the 30 rupees of EBITDA, तो 40 रुपए एडिशनल मिला, तो 40 में से शायद से 30 रुपए सीधा EBITDA में ऐड हो जाए. Then that 60 rupees you will compare versus the 25 times debt by EBITDA will read as 12x because your EBITDA has jumped the next year. So therefore अगर DSCR देखोगे तो over a period of time you will get to know कि 1 year, 2 year, 3 year में क्या दिख रहा है. But what you need to keep in mind is जो past है वो है, but even going forward if there is scope for improvement or deterioration both.
This will add
Right.
one point. Currently कुछ सर्वे वर्वे ऐसा निकला होगा कि लोगों के पास कितना सिम कार्ड है, 1% के
Yeah.
दो रहेंगे,
हम्म.
एक जियो या एक वोडाफोन एयरटेल या एक जियो एयरटेल. मिनिमम एक को चालू रखते हैं, एक में मिनिमम रिचार्ज करना है. मान लो वो बढ़ जाता है मिनिमम, तो at point of time you think yeah, good enough, I'll disconnect my other.
Absolutely.
So that might have an impact.
No, that will not have. I'll tell you why. Because suppose you are using that, you are keeping two SIM. One SIM you are not recharging, but you are keeping it active. Vodafone or Airtel will have to service, they'll have to give frequency to your network. That is using capacity. For every tower, they find out tenants. What is the tenants per tower? Now, I don't know the exact term because I don't do fundamental analysis, but to service your particular number, you are taking some space on that tower. It has to give frequency to you. Now imagine if we are four people here and we four are using same network. So the quality of the network will be lower because the strength is divided between four. That's why these companies they want to reduce. That's why they have brought this scheme. If within 3 months or 6 months you don't recharge your phone once, your number will get disconnected.
Yes.
Because what they found is people are keeping three SIM cards and they are not using it, and because of that the quality of network is going down. This is called tenants per tower. This is the
Tenancy
term
ratio.
that tenancy ratio kind of thing which they use it. So actually they want that only people who are actually using it
Simple बात है.
so that the quality of the network improves. Now imagine they have to give you coverage 100% of the time. You are not using that. That's why amount of capital that they'll have to invest to improve or upgrade their network will be huge. But even if 20% of their SIM cards are not active and they stop that coverage, imagine the efficiency in the network. That is why they are not they want people to non-active people to move out of their coverage.
On one side the cost goes down, second side the average revenue per user actually goes up because the person who is not paying is now compelled to pay.
So yeah, coming back to other type of ratios, which is like profitability, which we had already discussed, the margins ratio. We talked about EBITDA margin, we talked about EBIT margin, we talked about net margin, right? We didn't talk about what was return on capital, return on equity, or return on capital employed. So if I look at this, the morning statement which we were doing, my profit after tax was 7,12,500. This was the my net profit, right? What was the equity invested by promoter? In one case, it was 10 lakhs. In another case, it was 2 lakhs. So if I have to find out my return on equity, it will be profit after tax, which is your 7,12,000 is equal to 7,12,500 divided by 10 lakhs divided by equity. In another, what happened? In another case, it would be this divided by this share capital. Equity invested was 2 lakh rupees, right? Obviously, these numbers are way too off here. Numbers are way too off. If I keep these at say 2 lakhs, now let me keep this as 25,000. Look at this. Higher the returns is good for company. In first case, return on equity is just 2.5%. So that means whatever you started business to earn money, right? If you have to earn 2.5% from business, why not opening a fixed deposit with bank? At least you will get 6%.
But again, the catch here is going to be that if he's taking a loan, would he not have to pay the interest?
We will come to that. He paid interest here. This interest is already paid here.
Okay.
After paying interest, you have profit before tax, and after tax you pay. After PBT, you have tax, and then you have profit after tax. This after tax profit is available to shareholders. We are not considering any other line items right now. This profit after tax is available to shareholders. This is the return that the shareholder got. What was the amount invested by shareholder? In first case, it is 10 lakhs. In another case, it is 2 lakhs. So this is my return on equity. Now again, this is not telling me the full picture, because in my business, I am not using only equity. I am using debt as well, right? So I need to find out what is my return on capital employed. What is the total capital employed in both the cases? As of now, we have kept 10 lakhs. 8 lakhs is bank loan and 2 lakhs is share capital. In this case, it is share capital 10 lakhs. So my return on capital would be what? 2.5%. Because यहाँ पे denominator में we will add the debt portion. Because I have used share capital and bank loan both. So this is my capital employed. Share capital plus whatever is my loans. This is my capital employed. And I will add this to both, and I will try to find out what is my ROCE, return on capital employed.
Keep it into one step. Start करना है.
हाँ अगर बैंक लोन में है तो फिर करेगा राइट 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 यस यस
एक केस में आपको शायद से करना पड़ेगा, एक आपने
नहीं ROE इज
100%
राइट
equity रखा है ना आपने।
ROE इज राइट और इसके अंदर आई विल डू EBI अभी नंबर्स काफी ऑफ है इसमें क्योंकि हम लोग ने ये फिगर्स काफी ये बड़े ले लिए यहाँ पे
हाँ वो देखा।
हाँ so let's keep these as 1
कितना होना चाहिए ROE? What do you think? Just get
what I have taken I have taken EBIT into 1 minus tax rate even I don't use this 1 minus tax rate we will do this
or directly reduce the tax rate.
चलेगा यार I mean see this is fine this is like it's okay we just want to find out what is the range of this thing our return whether it is return on equity or return on capital employed so we just want to find the range on that so it's okay to get not 100% correct it's fine still
But ideally, a business should have like about more than 10.
Fixed deposit.
Don't forget you're right or wrong, but just think.
Two.
Like even with like bonds and others can also give me taxable return.
Sure. Would you be okay with 10% return?
No.
No.
What it should
More
be?
than
Just think
10.
through. You're on the right track. Think through. कितना होना चाहिए?
हाँ, होना चाहिए।
इसके अंदर
30-40%
डिविडेंड का भी रिटर्न होता है
सब कुछ आ गया. Shareholders return it will come through both the routes. One is dividend, and second is capital appreciation.
then it should be a little bit higher because it has to be
How high?
30%, 40%.
So think of it. One way to look at it was what are the alternative safer investment routes giving us? जैसे मनीष ने बताया, you have bank deposits, fixed deposit किया 6% तो उधर मिलता है. जैसे bond 8% और 10% तो मिलेगा. तो उसे थोड़ा ज्यादा मिलना चाहिए. Now you are at that end. Okay, थोड़ा ज्यादा मैं समझो 15%, 18% लेता हूँ. ठीक है, 25. आपने बोले 30, 40. अभी प्रैक्टिकली भी सोचना पड़ेगा. 30-40 मेरे एक्सपेक्टेशन तो कुछ भी हो सकता है. मैं लास्ट 20 साल से मार्केट का हिस्ट्री देखता हूँ. 20 years में मार्केट ने 13% करके दिया. So if I'm investing equity market as an overalls, okay, then my expectation should be around 13%. एक साल में 50 भी हो सकता है, एक साल में -20 भी हो सकता है. On a long term average, it should be 13%. Now on top of it, depending on कौन सी कंपनी है, कौन सा सेक्टर है, higher the risk, higher should be the risk.
see I have not taken that concept as
I'm
of
just-
now yeah
I know.
because if we arrive at that valuation FCFE and cost of equity का thing because इनको फिर बाकी कुछ सब चीजें भी
मैं उधर इसलिए नहीं जा रहा. मैं
हाँ.
सिर्फ कि they can apply ROE.
Exactly.
8% अच्छा लग रहा है, 20% अच्छा है. At least then they can put, so just to give you more perspective on that, company like Hindustan Unilever which trade phenomenally. Why do they trade phenomenally? Because उसका ROE is 150%. Okay. 100 रुपए धंधे में डालता है ना, 150 रुपए कमाता है वो साल. बाकी लोगों को 15 रुपए कमाने को हालत खराब हो जाती है, ये 150 रुपए कमाता है.
see return on equity on those companies on in sectors like IT in sectors like retail it will be always higher they are not capital intensive ना
पैसा डालना नहीं पड़ता.
ज्यादा पैसा नहीं डालना पड़ता है उसमें प्लस पैसा फटाफट आ जाता है compared to a capital intensive business like a company like L&T ROCE will be very low ROE will be low less than 15%
15% टारगेट कर रहे हैं. 2 साल से they improved it. I guess they would be around 15 crores.
it is very difficult to survive in that particular business
But then the question should be, I'm just going off track. Think of it like a business guy or a fundamental guy. यार 150% रिटर्न बनता है तो L&T रोड क्यों बनाता है? L&T को भी साबुन ही बेचना चाहिए. Very natural question, right? But HUL would have taken decades to reach 150%. Not every FMCG company will make that much money. So just to give you another example, there's a company called ITC. ITC का return on equity on cigarettes business कितना है पता है? Infinity.
return on equity
Return on equity infinity है. इतना पैसा होगा.
inelastic demand
तो कुछ भी कर लो, जितना टैक्स बढ़ना है सिगरेट का अभी पीता ही नहीं. टेंशन है सिगरेट, खुशी है सिगरेट, सब कुछ भी है. तो देख रहे हैं phenomenon, वो पैसा उन्होंने डाला FMCG में. अभी हुआ क्या? FMCG, HUL, PNG, आपके इतने सारे लोग हैं, कंपटीशन इतना है, पैसा कमाने को टाइम लगता है. They are investing money in FMCG business for last 15 years. उसका ROC कितना है? 5%. So till you reach that scale, market will not give you the premium. And maybe this is the reason, maybe, that ITC does not get the premium
I guess
which
budget के दिन only we were discussing ITC buy, ITC buy. We were not discussing here, na? नहीं ना? हाँ. Because budget के दिन I and Ankur or in one group we were discussing the same thing. ITC cigarette business, they have whatever they have. It's a long term buy. It's a long term buy. Whenever prices fall by 10 rupees, buy. The day it will become an FMCG company, the valuation wise, the PE ratio or whatever they get for HUL, ITC will go up like anything. When that will happen, no one knows. I can't say in 1 year, in 2 years, but they market will pay them premium. It will zoom like anything.
so therefore brands का एक premium रहता है ना. हम बोलते हैं मतलब normal घी बेचने वाले को कभी वो premium नहीं मिलता है, और वो डालडा घी और विजया घी और whatsoever. So because these guys have invested in the brands so much, now everybody relates Sabun, Lux, or Lifebuoy. The first name which will come to your mind is that. That's the premium which they get. Which so otherwise branding ये सब एकदम 50 से करता है ना, वो दिखता नहीं है, it's not tangible.
Right.
But tangibility अगर देखनी है तो returns में दिखेगी.
We discussed that intangible returns.
Yeah.
And
Sorry.
Alright, that's fine. That's fine. We are here to discuss only.
examples.
So after this, see, these were the main profitability ratios. Obviously, keeping everything in mind would be difficult. I am giving this PPT to you. You can definitely, work around with the numbers. Plus, go through the annual reports. We have gone through Bajaj Auto ka annual report. What I would suggest is that look at March 2019 ka annual report. Try and look at the full, income statement, balance sheet, and cash flow. In income statement, try to find what are the revenue drivers, what are their cost drivers. Revenue drivers means price into sales. Do that analysis for last 2 and 3 years. You will come to know what is the average. See, they will not give you average price for their product. If we know that this is the number of units they have sold, that if I take total sales divided by total number of bikes sold, I will get the average price. Same cheese with the cost. Then only you will come to know what exactly is happening in that particular business. Whether their cost of goods sold is increasing, or now we saw that EBITDA is good. EBITDA margin for Bajaj Auto is really good, but net profit margin is not good. That means there is something to do with either depreciation or amortization. Means they have done huge capex in the recent past, which March 17 ka balance sheet said us. Okay, no, they have done it. So this kind of analysis you will have to do for each and every company. So what I would suggest, look at Bajaj Auto, look at Hero Honda, and look at TVS Motors
For a comparison.
for a comparison per se. Then only you will get to know what exactly they are doing in their particular business and how the ratios are impacting. Right? See, there are other important ratios which are called as valuation ratios. Now, normally, as an equity trader, we normally give more importance to such ratios also. But a guy who is investing in a company fundamentally, he will look at all the ratios. But whenever, as into an investment banking, we look at valuation ratios a lot, and margin ratios also we look at, but more importance we give to valuation ratios at what value the company is trading right now. Right? So the first we will look at is price to sales. For companies like infra companies, where they do not generate that much of EBITDA or cash on daily basis. Obviously, for example, say L&T. If L&T is constructing, say, metro, obviously this metro they will take at least 2 to 3 years to construct. Their revenue will start only after that. So if I find out what is EBITDA of that particular company, will I get any EBITDA?
नहीं.
but I can at least look at the sales value or the contract value that they have taken. For example, the cost of this metro is say 5,000 crores or 10,000 crores for 2 years, for 3 years. I can divide those 5,000 or 10,000 crores divided by 3. I can find out this is their average sales. So your ratios will also depend from industry to industry. Some industry price to sales is more important. Some industry price to book value is more important. Like banks. Do banks have any EBITDA? No. We'll come to banks later. We will cover that separately. What is banks and all that stuff. But in banks, majorly we use is price to equity and price to book value. That too, we give more importance to price to book value. In some industries, we'll give more weightage to EV by EBITDA. EV is your enterprise value. We'll come to that as well. So as a valuation perspective, it depends from industry to industry. So we can't compare one industry with other industry, and also we can't compare a company in retail sector with a company in infra sector on the same parameters. We'll have to tweak our parameters accordingly. So one ratio here we use is price to sales. What is the market cap of the company divided by total sales? Or price per sale divided by total sales per outstanding number of shares. We'll try to find out that. The second method is price to book value. Again, we discuss what is book value over here. My book value here is equity, share capital. This is my book value. I need to see what is the share price of the company. Like in case of Bajaj Auto, share price is close to 3,000. And let's look at the book value. What was the book value? This balance sheet. Yeah. This is the book value. 21,779, and market cap was totally around 85 crores, 85,000 crores we saw. So book value, price to book value will be is equal to 85,000 crores divided by some 22,000 crores. So this is the price to book value for Bajaj Auto, right? 22,000 over here, and market cap where we saw quotes में था some 85,000 crore it had where we saw.
Yes, hold on. Below the chart. Yeah.
Yeah, 88,000 crores. So roughly it is trading at 4 times your book value. Means whatever is the equity value right now, market is giving you a premium of 4 times. This is price to book value is more relevant in banks, insurance companies, because banks and insurance companies normally they'll update their assets. See, what is the business of bank? Lending and borrowing. They don't have any other assets majorly it will be deposits, loans and advances. So ultimately it's full cash only. That's why you see price to book value of banks would be close to 1.5 of public sector banks, at least it is that much. For private sector it will be close to 3-4.
Public will be less than 1. Private will depend from banks to banks and range from say 2 to 6.
2 to 6. Public is, I guess, close to 1. SBI is 1, right?
SBI छोड़ दो बाकी सब 1.
Some. So that depends. The next is price to equity. This is again one of the important valuation ratio. So whatever EPS we got, in case of Bajaj Auto, we got EPS of close to 167, or PAT of, what was PAT? Financials and income statement consolidated. Yeah. If I take this annual number, yeah,
See, if I can suggest, use the screener.in website.
okay.
वो एक ही शीट में आएगा, आपको टैब क्लिक नहीं करना होगा, it just saves time.
Which one?
Screener.in.
I don't use that normal. Screener.in, right?
Read everything on one screen.
This one, na?
हाँ.
Okay.
Everything on one screen, so you don't need to click on tabs.
Okay.
You get quarterly, scroll down, you get
There is
annual.
This is annual, right?
Yeah.
Okay.
You get balance sheet, cash flow, ratios.
Okay, which is good. Yeah, this is good. This is good. So we were at price to equity. I get the valuation multiple also directly in this case.
PY is there. In fact, you can see the PY charts also.
See the stock PE. 17.66. 17.66 is nothing but your market price, which is your stock price right now, divided by your EPS. So that means for you are earning 106 rupees or 167 rupees. To earn that, you are paying 3000 rupees for that particular stock. So that means 17 times you are paying, for that particular EPS, 17 to 18 times. So so basically you need 17 years to break even, because every year you will be paying you will be getting 167 rupees. Obviously that will be increasing, but at this point of time, every year if you are getting 167 rupees, it will take 17 years to break even. Now this will depend from industry to industry, from company to company. Here they are paying 17 times. For TVS Motors, it will be 15, 18, 20. For Hero Honda, it will be 20, 20 and whatever. So we need to find out, why people are paying higher premium to a particular company or not. That is more important.
But you understand why we are calculating a P by E or P by V? What do you think we are trying to do?
Basically figuring out your
How many
return.
years it will take? जैसे definition बता रहे हैं.
No, Jack. So think of it. See, right now you got, as he said, one side you got Bajaj, other side you got Hero Honda. Okay. You saw the P&L, you saw the balance sheet, cash flows, ratios निकाला. But effectively, end of the day, you want to buy something which will make money for you, right? So you want to assess. भाई इसका वैल्यू 50,000 करोड़ मार्केट कैप है, इसका वैल्यू 60,000 करोड़ मार्केट कैप है. Which company should I buy? If I want to do that, there is something known as a relative analysis. So say for example, life में क्या होता है, बचपन से क्या होता था? Say we were in the same class and she was a ranker. Our parents would meet and say, देखो बेटी तो अच्छे मार्क्स लाती है, जाए आपको भी बनना पड़ेगा. Our parents used to do relative benchmarking in everything. Okay, so I remember, so there's this professor, okay, he said, there is this empty envelope, okay, I have, and he puts out in the classroom for a bid. कितने में खरीदोगे? Everybody like zero. Okay, क्यों zero? Then Jay comes up and says, sir, I'll pay 10 rupees. Why? Only he knows. But then there is a benchmark to it. Now, whenever you will start thinking, you have a relative to it. अब 10 क्यों हो रहा है? कुछ होगा उसके अंदर. मैं 15 बोलती हूँ. So it's about relatively. If say for example a Bajaj Finance is trading at 7 times price to earnings, versus if I feel a HDFC traded 3 times price to earnings, मतलब क्या हुआ? बजाज फाइनेंस अगर 100 रुपए कमा रहा है तो उसको जनता 700 रुपए का वैल्यू देगी, ठीक है। और एचडीएफसी अगर 100 रुपए कमा रहा है तो उसको वैल्यू से 300 रुपए देगी। Somewhere, if other things being equal, somewhere it has to converge. Either 7 has to become 3 or 3 has to become 7. That's the bet you are taking. That's the bet you are taking. Okay. If you feel that probably 7x is the right number and therefore you will purchase HDFC and expect it to move towards 7. It may not move towards 7, but it may move towards 4 or 5. And that's where you make money. If not, you feel यार 7 पे तो बजाज फाइनेंस बहुत एक्सपेंसिव है, मैं एक काम करता हूँ मेरे शेयर्स बेच देता हूँ, वो शेयर्स बेच के एचडीएफसी में। सो इट्स रिलेटिव थिंकिंग। बाजार में क्या करते हैं भैया, एप्पल कितने का दिया, 10 रुपए का डजन, व्हाट विल डू नेक्स्ट थिंग, तो नेक्स्ट वेंडर, वो तो 10 रुपए में दे रहा है, 15 में क्यों दे रहे हो? इट्स एज सिंपल एज दैट।
Right. But more important than price to equity comes the another ratio, which is PEG ratio. Because in your PEG ratio, you normally look at the growth of the EPS. Because I don't know, today Bajaj Auto is giving us 167 rupees as EPS. TVS would be giving say 100 rupees. Okay. I need to see what is the growth of this EPS coming years down the line. This year growth means approximately 5 years growth we take. I don't know in industry what they use, but normally we use 5 years growth.
It's generally to each their own, people take 3
Right.
years, 1 year, 5 years.
So this will help me in understanding that A, what is the price, what is the PE of the company. Second, vis-a-vis the growth of that EPS, what is better. Say for example, we saw for Bajaj Auto PE is 17. Let's take for TVS it is 15, and let's take for Hero Honda it is 20. This is PE ratio. Right? Here I would find what is my EPS growth rate as denominator. Suppose for Bajaj EPS growth rate, let's take example. Let's take what was the EPS last year.
नीचे देखो ना ग्रोथ भी है,
नीचे भी है.
हाँ, तो रेशियो जो दिया हुआ है, just cross slightly above this.
Okay.
पीएल के नीचे होगा ये,
हाँ. Where is my EPS sales growth? Profit growth. See here. Every year my profit is growing. For last 10 years it has grown at 21.90%. Let's take 22%. So I will take here as 22%. Let's take this is at 20%. This also at say 20%. Now, यहाँ पे P is higher. People are paying premium to this. But now let's look at PEG ratio, which is your PE divided by your EPS growth rate. Something wrong in this.
वो परसेंट है इसके,
हाँ,
आप उसको एब्सोल्यूट कर देंगे,
इसको एब्सोल्यूट कर दो, राइट? Okay. So this is 22, this is 20, and this is 20. Yeah. And now this will be my PEG ratio. This is PEG ratio. So what do you come to, what do you understand by this now? PEG ratio of Bajaj is 0.77. PEG ratio for TVS or for Hero Honda is 0.75, and for this it is 1.
which is better according to you?
Bajaj,
This is Bajaj,
sorry,
this
TVS,
is
because
Hero Honda, and this is TVS. Same, exactly.
TVS growth rate, TVS is okay, done. middle one is better, Hero, because EPS growth rate is also good and price to earnings is low.
Giving up cheaper.
Yeah.
Cheaper for a better growth. That's the way.
Right. So basically, PEG ratio, we normally look at PEG ratio a lot as compared to PE, because normally, like afternoon we were discussing about DMart. If you look at the PE of DMart, it is way too high. Or PE of certain companies, it will be more than 40-45 times. In case of retail, I guess it is the case.
Retail FMCG.
Retail FMCG. So it is difficult for us to understand why someone is paying 40-45 times. Whether which companies, now what is the difference between 40 and 45? We don't know. I can tell the difference between 20 and 45, but 40 and 45 क्या difference होगा उतना? It is relatively difficult to find out. So that's why we use EPS growth rate to normalize that. This will give us a proper picture. Now, in this case, if you only look at PE, TVS looks good.
Yeah.
Means obviously, it feels that a public is pricing TVS at 20 times. Means it is
तो महंगा है ठीक है अभी आप अज्यूम कर लो उसका ग्रोथ रेट 35% TVS TVS is actually running that fast. I wouldn't mind paying a 20x price to earnings. So therefore, companies which are fast growing, they may tend to have a higher price to earnings also. So अपन जनरली बोलते हैं हायर पी तो एक्सपेंसिव है लोअर पी सस्ता है may not always be the case. This you will come to know once you apply
to APS growth.
So
That's why you will come to know whether why public is investing or they are ready to pay higher PE to any particular company. Now imagine the whole industry is trading at the average of 0.75. Okay, and this is the PE of these two companies. So investors are getting this at a peg of 0.57. So for them this is dirt cheap. So they will be ready to pay to TVS a higher multiple as long as your PEG ratio reaches to this particular level. Suppose this is the growth rate if we assume. Okay. So what is the multiple that they are ready to pay?
एक एग्जांपल जस्ट एक्सटेंडिंग कंट्रोल Z करिए वापस 0.5 जो था
हाँ.
ओके नीचे ईपीएस भी लिख दीजिए ना टीवीएस का ईपीएस अभी कहीं पे नीचे लिख दीजिए
Okay.
ईपीएस लेट्स अज्यूम ईपीएस इज 10 रुपीस
Okay.
तो उसका वैल्यू निकालिए वैल्यू क्या होगा पीई इनटू ईपीएस विल गिव यू द वैल्यू पर शेयर ठीक है
What you want now?
20 into 10 20 into 10
Yes, this is the value of the share. Okay.
तो अभी इसको ये मिल रहा है 200 रुपीस पे एंट्री अज्यूम करते हैं ठीक है तो as Manish explained you are willing to ride up to 0.57 going to 0.75 ठीक है तो what will you expect चलो P expand भी होता है तो भी मेरे को प्रॉब्लम नहीं तो करिए P expand
So I expanded this P 25 से for example जो 75 करना है मुझे तो
75 हाँ
चलो ठीक है
30 कर
27 कर देता हूँ.
as soon as market जितना आया what is the money 70 rupees on 200 bucks. So basically, how will you then estimate? End of the day, you are doing some valuation to enter and then to exit. In your mind, what you are saying is other things being equal, only if the PE gets adjusted such that PEG comes to the same place.
So I wanted to answer to both तुम दोनों का conversation that why market is paying higher to DMart, right? You both were having the same thing. The answer lies in the EPS growth rate. We need to do that analysis for that. But obviously, DMart is listed last year. You will not have EPS growth rate historical for that. So it will be difficult to conclude on that. But yeah, whenever PE is higher, then everyone questions why someone is paying higher PE to a particular company. So your answer lies in EPS growth rate. This will answer your query.
So there are multiple things. I believe that maybe viewport analysis करेंगे तो थोड़ा next level हो जाएगा. But typically when you're thinking of higher P's, focus on two things. One is growth and ROE. अगर आप 1 रुपया डाल के जितना ज्यादा पैसा बना सकते हो relatively to compare to others, market will give you that premium. Why? Because see, when can you earn phenomenal returns? When either you have an iPhone like product, कोई नहीं बना सकता है, or you have a distribution branding like a Lux product. So somewhere there is monopolistic power, somewhere there is brand power which is coming into play and helping you earn that super normal returns. Okay. So therefore market will give you premium in form of higher price to earnings also. Why? Because they feel because of this brand, ये जो return on equity 20% दिखा रहा है, for example, it is sustainable. There is longevity, and therefore I don't mind because end of the day market, what do people want? Less uncertainty. So if somebody is giving me assured returns in equities, I'll ascribe a higher premium. So go and growth. Now there is a combination. There is a, I don't know whether you're covering this.
Which one?
There is a marriage between ROE and growth.
ROE into RR. That one? No, I'm not covering that right now because अभी ये lecture में नहीं होगा.
That's so basically, whenever you cover that, I think that is something which will help you understand why a company which has a higher return on earnings will actually, or return on equity will actually have higher growth rates too.
See, it ultimately depends on the retention ratio. If you see here, I'm just covering this in a nutshell that whenever company is earning say 1 rupee, it will pay certain amount as dividend. It will give certain amount back to shareholders. Certain amount it will keep for itself for its future growth. That is called as retention ratio. Higher the retention ratio means company is putting more money back into its own business. Now imagine if a company which has a higher ROE and if they are putting in more money into business, you're again on incremental EPS, whatever they got, whatever money they are plowing back, they're again getting the same amount of ROE. So the growth is faster. So basically, what do we say? CAGR will be very fast for that company.
Now take an example. If you don't open HULs on screen,
By the time these ratios get published, वो quarter move हो जाता है.
you're right. Sure.
तब तक for a layman to
Just just look at this. Growth of 116%. Okay. ROCE and ROE of 82%. It's unheard of, right? अगर मैं 100 रुपए डाल के साल में 80 रुपए कमा लेता हूँ वापस, सवा साल में तो मेरा कैपिटल वापस आ जाएगा. हर साल मतलब, and imagine if I can actually retain that 80 into the business and earn another 80 on that. तो growth क्या होगा? Compounding effect आएगा. But क्या हो रहा है? Sorry. Can you operate only growth?
हाँ.
My bad.
So you want this thing?
अभी नीचे जाइए, नीचे रिटेंशन P&L पे जाइए आप.
Okay.
The
Annual one.
Yes, please. See, what is happening is dividend payout ratio. Earlier they were at 65%. तो अगर 2,500 कमाया तो उसमें 65% they used to dividend out. But over a period of time they've realized, because I'm not able to earn incrementally higher money on the amount that I retain. तो क्या करते हैं? वो लोग ज़्यादा dividend pay out. So investors like companies which either can make money by themselves or return by capital, rather than deteriorating your ROCE. I would
So
like,
they are returning the capital.
yes.
See here, dividend payout ratio is increasing from 71% of 3,900. It has increased to 80% of 7,300. So roughly approximately 5,000 rupees or net profit we are taking. So roughly about 4,000 rupees they are returning back to the customer, to their shareholders.
Assume if I'm not able to earn more money in the, तो मैं क्या करूँगा? बैंक में बढ़ा देगा कैश. बैंक में बढ़ा देगा तो कितना मिलेगा मुझे? 6% मिलेगा. और 6% मिलेगा धंधे में तो 80% कमा रहा हूँ. All people say, "Boss, why are you doing that? You return that capital to us."
So yes, where were
Sorry.
we?
So that's how so growth and just if we can take ITC's case also.
Let's look at ITC then. ITC.
So ITC has a ROE of 22%. ROS is 34%. Now 22 is not bad. This is phenomenal. Okay.
And if I look at this,
अभी होता है पहले वो एक्चुअल में बहुत ज्यादा कैश देता था. They actually reduced it over a period of time because they are deploying that money into FMCG. But what is that leading to? If you can scroll down a bit. 10 years अगर एवरेज देखोगे आरओई का पहले एक्चुअली ज्यादा होता था 27% कमा रहे थे और अभी सिर्फ 22% 5% रिडक्शन why because they are utilizing the money that they earn in assets which are not earning incrementally higher money so your averages will go down over a long term and therefore the stock is not getting re-rated
But I
इसका
guess-
PE देखिए आप 17x है HUL का देखो
but I guess this
59x.
is this is the right time to enter ITC. Someone who wants to go for a long term bet.
This
is like-
a good idea.
Exactly. I mean, the only thing is when it will turn around, we don't know.
They've been investing for 15 years. 15 years, but they've not seen the results so far. So,
You are in the stock for 15 years?
15 years में तो बहुत पैसा बनाया है.
ITC to is like boss. I know people who are just waiting for ITC to turn around. The day it will turn around, this current price 207 will be 2074.5. It will command the same valuation of HUL, but it will take some more time. Now, we are discussing about ITC. They have one particular business, cigarette business, which Sarkar is doing top, no, left, right, center to impose taxes and whatnot on that. But still, the demand of their product is not coming down. The profitability margin of that product is not coming to that extent. The way it comes down, it is not coming down. Why? People are still smoking cigarettes and they are easily able to pass on the incremental cost on the prices, kind of thing. The only thing is that right now people are not ready to accept ITC as an FMCG company. I guess 50-60% comes from cigarettes still, right?
Three-fourths, almost.
3/4. 75% still comes from cigarette. So imagine when I am valuing a company like ITC, obviously I will value two companies separately. A company which is into a business of cigarettes and B company which is into a business of FMCG. So my valuation would be different
Consolidated देखना पड़ेगा.
for both the companies.
Okay.
Let's see.
इसका स्प्लिट नहीं आता ना कि सिगरेट्स का इतना है एफएमसीजी
हाँ आता है. From the annual report you will get this. Right? So in valuation, again, as I said that industry to industry wide your valuation ratio would differ. The point which I wanted to discuss on price to equity and PEG ratio, that price to equity sometimes tries to mislead you. Like the example that we saw, PE was higher for one company, right? But when we derived the PEG ratio, we came to know that in fact the EPS growth is higher for that company. That's why PE is higher. That's why people are ready to pay higher PE to any particular company. So whenever next time anyone asks you why someone is ready to pay higher PE to that particular company, the answer lies in your EPS growth. You need to find out whether the EPS growth is there. See how when will your EPS grow? When your overall sales is good,
when your ROCE and
when your return on equity and everything is good, when your overall business is doing good, that's why your EPS will be good, right? That's why people are paying higher premium to a particular company. Got it? The another method is dividend yield. I don't know still people if use this or not. Because at one point of time, dividend was one of the Brahmastra for any company. Higher dividends you pay, and people used to love it.
Because they wanted quick returns.
They wanted quick returns. For example, if I am buying certain stock for say 100 rupees, on an average, if I am getting 5 to 10 rupees, 5 rupees as a dividend, so 5% is my return already. On top of that, if there is any capital appreciation, that will be my over and above. Right? Again, dividend payout ratio is a normal. It's nothing but whatever net income you have. Of that net income, what are you paying back to your shareholders? And whatever you are retaining, that will be your retention ratio. This is dividend payout ratio, and the other one would be retention ratio. Right? Another important valuation methodology is EV by EBITDA. Now, in this case, we calculated EBITDA. We calculated EBITDA. Now, this EBITDA is before interest. EBITDA will lie somewhere here. After gross profit, we will deduct SMAG, right? And after that, we will get EBITDA. After gross profit, we deducted SMAG. After that, we got EBITDA. Your depreciation and amortization is after that. Your EBIT is then after that you have interest expense. So whenever you are taking EBITDA as denominator, so that means you are taking interest portion as well. So that's why you will have to consider, since your denominator has interest, so your numerator has to have bank loan as well, right? Because interest you pay on bank loan. Perfect. Everywhere in this valuation we were using price. Everywhere it is price, but here we will include enterprise value. Now what is enterprise value of a company? Okay, so Peter, क्या है? I will put it here. What is enterprise value? What is enterprise value is your share price multiply by your outstanding shares, which is your market cap.
वही बोलिए ये तो मार्केट कैप ही होगा
Right?
Enterprise होगा.
This is market cap plus
Share price into OSS.
outstanding shares. Outstanding shares, which will be your market cap. I will add debt.
Okay.
Right? यहाँ पे आ जाएगा मेरा debt.
शेयर प्राइस में आपका वो सब भी आ गया है एसेट्स का वैल्यूएशन.
हाँ, share price में सब हो जाता है वो. Exactly. Now, just think about a company. Suppose you want to buy any company. You want to be the owner of that company. In this case,
You have to buy all the promoter shares.
exactly.
Plus
Whatever is the liability of the company, you will have to buy that as well. Right? So I have whatever is the outstanding shares. I have paid the share price plus whatever is the debt of the company liability. I have paid that. Now this company is mine. Plus, right? Now this company is mine. But when I am acquiring this company will have certain cash. I have paid this share capital. I have paid the debt also, like share capital and debt. Now this full side is mine. So obviously this full side will be mine. This includes cash. Now cash, obviously, this is the benefit that you got, whatever is the cash of the company. So I will
Cash plus surplus and everything that they have.
exactly whatever cash minus cash. Market cap plus debt minus cash. We also add back minority interest. I will cover this topic sometime later. what is minority interest. In short, we discussed standalone and consolidated concept, right?
Yes.
So in some companies, I have just 50. You know the concept of minority interest, what it is? Not at all? Okay, then I will not cover it right now because it will be like too much then. So we add back minority interest. So it is basically when we consolidate, when we take the consolidated balance sheet, we take balance sheet and income statement of our subsidiaries as well,
Okay.
assuming that we own 100% in that subsidiary.
Assuming.
Huh.
As in, मतलब अभी तो मैंने सारे के सारे shares खरीद लिए.
If I am having 51% stake in that company, then I am the owner of that company as per law. So if that is the case, I am required to show full balance sheet and income statement of that company into my. Now, just now we are discussing, so in flow I will just tell you something. So I own only 51%, but in my balance sheet I have accounted for 100%. So the 49% thing I need to return back, right? Someone else is the owner of that, right? As per accounting standards, it says if you own 50 or more than that, you have to consolidate the statement of that subsidiary, show it into your particular accounts, and whatever is the balance, like 49%, you repay it as a minority interest. That is your liability. Example, you are a company. You own 51% stake in my company. Okay. Now you are the owner. You are creating your accounts. So you will show 100% of my accounts into your accounts in your books. But you own only 51%. So basically, whatever is my profit, you are taking 100% right now. You need to give back 49% back to me. Perfect. So that 49% is minority interest in short and in very simple language.
So basically all the shares except the promoters.
Not the
Except the
promoters.
majority holder.
No.
नहीं देखो अभी एक कंपनी है ठीक है उसका 51% स्टेक प्रमोटर के पास है अभी वो कंपनी की सब्सिडियरी कंपनी है छोटी 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 वो कंपनी में भी ये जो बड़ी कंपनी है उसका 51% स्टेक है या 40% अभी रूल के हिसाब से अभी जैसे बजाज का देखा तो उसका 51 था
Yeah.
पर अज्यूम करते थे 49% बजाज का होल्डिंग है बजाज ऑटो अभी बजाज ऑटो के अंदर बजाज मार्केटिंग है और बजाज वो रॉ मटेरियल खरीदने का एक कंपनी है तो उसमें बजाज ऑटो का स्टेक 51% है लेकिन बजाज मेन बजाज का स्टेक 49% है बजाज ऑटो में बजाज ऑटो का स्टेक 51% है बजाज रिटेलिंग में और रॉ मटेरियल बाय करने में 15 जब भी बजाज ऑटो का बैलेंस शीट बनता है ना तो उसका भी प्रॉफिट एंड लॉस जो होता है ना बजाज मार्केटिंग का और ये रॉ मटेरियल बाय करने का उसका सब ऐड करके इसमें डालने का और वो अभी उसमें 100% ऐड कर देने का और उसका 49 माइनस करके माइनॉरिटी इंटरेस्ट बताने का इफ आई एम राइट
Yeah. That is
51 माइनस करके माइनॉरिटी इंटरेस्ट बताने का है.
51.
अपना हिस्सा है।
51 is your
बजाज
share.
ऑटो का हिस्सा
हाँ.
So see, out of 100, 51 is your share. So you need, if you are taking full 100 rupees, so you need to return back 49 to me because 51 is your, so 49 is mine. So currently what you are doing, you are taking 100% of my accounts into your accounts. You are showing it in your book. Perfect. This is done. How much percent you own? 51. What is the percent you need to return back to me? 49. So you, that percentage you are returning back to me. So that is minority interest. Now this is your liability because you need to give that 49% back to me, right?
Of minority interest accounts for subsidiary.
For subsidiary.
Not my major.
Of subsidiaries. No. So you need to return that 49% to me. Perfect. That is your liability. unless if suppose 100 rupees was my profit, so out of that 100, 51 is your share, 49 is my share, right? So when you are showing your profit and loss statement, whatever thing, you have taken my 100 rupees, you will show 100 rupees from XYZ balance sheet. Now 51 rupees is yours and 49 rupees is of minority. So you will write minority interest 49 rupees, which means anybody will read, they will understand, okay, so she owns only this much and 49 rupees she needs to return back to the minority shareholders, to the subsidiary shareholders. So this is your liability which you need to pay. So that's why we add back minority interest into our calculation. So this will give you enterprise value and that you divide by your EBITDA. We get the multiple. Now let's look at this particular thing. If we can find for Bajaj Auto, what is the multiple? I don't invest in a company looking at the fundamentals, so not well versed with this particular screener. See, this is the market cap, this is the dividend yield. Dividend yield is what? Dividend divided by stock price. 1% something. Sales quarter, and this is fine. Let's go to valuation ratios. See this debtor days, inventory days, and all that stuff is there. I guess this is good website, screener.in, and then you can find the company name. So there you will get everything. Where are multiples? Can I see multiples? Sales growth, profit growth, CAGR, return on equity. EV by EBITDA they have not given. Market cap and EV by EBITDA. No, they have not given EV by EBITDA. I guess this here we will have EV by EBITDA product valuations ratios. See, EBITDA, EBIT, profit before tax. This is the margin profitability ratios, return on net worth, return on equity basically. 21 roughly about that. Return on capital employed, which includes your debt. Return on assets, debt by equity, this is fine. Valuation ratio. See this. This is the enterprise value of your Bajaj Auto. Market cap was 88. We add debt. Company didn't have any debt, right? Company had cash, so we deduct cash, hence enterprise value is less. Look at EV by EBITDA, 12.58. See, price to book value, remember we calculated we were getting 4 times. This is approximately 3.87 times. So this depends from industry to industry.
What are the ROCE, ROE, PE, no?
Huh.
And all the other ratios you're supposed to calculate while taking a fundamental decision.
Ideally, yes. But see, once like you are into this fundamental analysis, once you know, okay, this is the ratio range, then I need not calculate for each and everything. I am more interested into valuation ratios. Depends, from which perspective. As a creditor, as a bank, I will look at leverage a lot. Leverage and my liquidity and my profitability ratios. Yeah, now queries.
अभी ये सारे इश्यूज हैं
हाँ.
तो फिलहाल हम लोग इसका डेफिनेशन और कंप्यूट कैसे करते हैं वो माइंड में रखना पड़ेगा
See, exactly.
थोड़े का रह गया है थोड़े का देखना पड़ेगा एक दो बार।
See, exactly. I have given this particular thing in PPT. Now, see, this all is bookish knowledge kind of thing. I mean,
Too much of it.
too much of it. That's why I have covered only major things which I wanted to you guys to cover. Otherwise, if I go to each and every definition, then probably we would have still now been leverage ratio only. This is something which we learned in 2 years.
Oh,
It is very difficult to cover that. Yeah. I guess this we can keep it for next lecture. Corporate actions and equity research part. Ideally, equity research is like it's a MBA concept, and we took 2 years. Now I don't know how I will explain you in two
We
hours.
have a night book which we can go through. for
Ashwath Damodaran, fundamental analysis. Ashwath Damodaran.
अभी ऐसा हो गया मैं क्या करूँ टेक्निकल करूँ
अरे मेरा तो
पाइथन करूँ कि ये
ऑप्शन भी
करूँ
ऊपर से आता है.
हाँ वही ना
See.
ऑप्शन मेरे ऊपर से ही है
Now I will tell you one thing. How you should prioritize this. No need for calculation and all that stuff. You have this PPT in your with you. Obviously, थोड़ा time लगेगा. How you ratify, I don't know. I can't explain ROA, ROE, ROCE kind of thing कि कैसे याद रखोगे आप इसको, because वो तो फॉर्मूला मैथ्स का है. 2 + 2 = 4. अब उसको कैसे एक्सप्लेन करना है, आई डोंट नो.
सिंपल टर्म में ये
एक-
है
Has
कि
to be
इतना
like some relation sectors का stock भी एक बार देखना पड़ेगा.
What I would suggest is start with one particular sector. Now that we have covered Bajaj Auto, I have covered purposely auto industry and that too scooters, because see Bajaj Auto is majorly into scooters and bikes जो भी है इनका. So आपका your peers would be Hero Honda and TVS Motors. These three companies. Now what this is the good website which even I was not aware of,
हाँ
screener.in.
वही मैं सोची थी कि कंप्यूट नहीं करेंगे यहाँ से देख लेंगे कंपेयर कर लेंगे
और data
Calculations
download
खाली
होने
याद
से-
रख लेंगे.
Exactly. See, ultimately, I'm not going to, or no one is going to test what is ROE. Tell me formula of ROE.
Even how does it imply? What
Exactly.
range it should be? मतलब मैं मेरे दिमाग में ये बना के रखूं कि
हाँ.
ROE ये होता है तो
See, exactly.
इसका सिंपल ऐसे होगा मान लो हम लोग फिक्स डिपॉजिट करते हैं तब अपने को 6% मिलता है तो कंपनी ने इतना पैसा डाला कैपिटल एम्प्लॉय किया तो उसको कितना टका मिल रहा
नहीं exactly हम लोग आएंगे ना उस पे भी बीच में. We will come to that. See this. The equity research में we will arrive at all the things. This is cost of equity.
है
This is cost of equity. Risk-free rate, beta, ये सब है. But this is a little advanced concept which we learnt in 2 years. Even after second year when we completed, we were not sure. So I don't know in 2 hours how you will cover this. But
ये मतलब
नहीं बट यू आर
company
गिविंग
में
अस
ये अलग है. Every other company will give you exception.
see exactly. So I had put this in. Depending on how the speed is, how we can capture it, I will try to cover. Otherwise, it will be ऐसा होगा ना. I will try to teach you something advanced and basic ही भूल गए.
नहीं पर आपका जो प्रैक्टिकल एक्सपीरियंस आता है ना इसमें तो थोड़ा इजी
हमारे
होगा
पास नहीं है. That is true.
The thing is, right now, even in our job, we use this, but not to that extent. And I am not a fundamental investor. I don't look at fundamentals of the company because I'll tell you why. I'll tell you why. Earlier, 1 year ago, 1.5 years ago, Yes Bank was a quality company.
Yeah, exactly.
Yes Bank was a quality company. I would tell you, and what happened? Quarterly results they declared. What they declared in their quarterly results? That 1 year ago, what results we declared, the NPA we declared was underestimated. We declared NPA of 700 crores and actual NPA was more than 4,500 crores. So now just imagine a company like Yes Bank, which was a quality stock at that point of time, stock tanked by I guess more than 10-15% that day. Imagine you are showing 700 crores and your actual NPA was 4,500 crores, means almost 7 times, almost 6 to 7 times you had like tried to hide or whatever was the case. ultimately, so this is the case with the fundamentals a lot. You don't know whether whatever company is disclosing is the right or not.
You have to keep up every quarter by quarter. You have to keep up.
No, the company disclose it right now. Company never it mentioned that this is our NPA. All of a sudden they came, okay, last year whatever NPA we discussed was wrong NPA. Actual NPA was 4,500 crores.
उसका कुछ मार्केट में ऐसा पॉइंटर्स आता रहेगा ना कि ये प्रेशर डाल रहा है कि आरबीआई साइड से कुछ pressure
Obviously,
डाल रहा है।
if there was some pressure from RBI, that's why all these things came into picture, right?
वरना तो डिस्क्लोज ही नहीं करता वैसे।
Otherwise disclose नहीं होते. काफी चीजें वैसी हुई है.
Sorry to interrupt, guys. I need to part. Nice
Okay.
meeting you.
Hi.
Yeah. See you guys. Good night.
मेरे ऑफिस में 300 में भी लिया। Yes.
हाँ, people have it for 300. Right now price is 30 rupees.
2013 में 300 के नहीं
Okay.
अभी बेचा लास्ट वीक 38
बेचने की क्या जरूरत थी?
एवरेज प्राइस 60 था लेकिन अभी भरोसा नहीं।
Okay. So I guess this is it about first lecture of our fundamental analysis. Rest we can cover in the next part.
तो वो शायद मैं मिस कर दिया था वरना उस दिन ही निकाल देता 10-15% लॉस।
Smith, you have any query? Vidhi nahi. Vaishali. Vaishali, you have any query? See, it is little difficult right now. Even I do understand that 2 hours mein we can't do justice to a fundamental analysis and all that stuff. Because things which we learned for over 5 years, we can't teach you in 2 hours. Na?
मेन थिंग हम लोग जो आपने कवर किया था
Hmm.
वही वापस एक बार देख ले तो अच्छा रहेगा।
हाँ।
सब कुछ जो
You want me to go through it everything again?
नहीं just for us to revise and
हाँ.
to के दिमाग में
See,
रहे।
main thing is now can you at least know from where each figure is coming?
हाँ।
What is share capital?
Yeah.
Why did share capital actually come into existence?
Yes.
कहाँ से आया वो?
Yes.
What is the origin of share capital? कहाँ से born कहाँ से हुआ वो share capital? फिर borrowing हुआ. Borrowings, why people are borrowing? Why company is borrowing? Then where the money goes? It goes to cash. From cash to investments, your inventories and all that stuff. Then it goes to sales. ये sales में क्या क्या line items है? And your PAT.
क्या क्या expenses है क्या क्या interest है EBITDA
Yeah.
है
How is it going to use in algo trading?
That I
उसकी
don't
अलग
know.
strategies
See,
रहेगी।
Fundamentally.
fundamentals would be different. How I would tell you how portfolio managers do it. I don't have that particular this thing. There is a app called Small Case Crystal.ai kind of thing. So which track companies on fundamental basis. So, for example, there are 2,000 or 5,000 companies, whatever. Now, first criteria, suppose I want company with zero debt or where my debt to equity is less than certain percentage. Okay, so your algo would run the lookup. It will show you certain filters. After that, suppose you are telling that okay, you want in particular sector. You arrived at that sector. Now you are looking at okay, the profitability of the company has to be increasing compared to last 3 years or 4 years. Again, it will run and it will come throw you certain result. Then there are various parameters which you can have. The valuation ratios have to move accordingly. Like EV by EBITDA has to be of certain multiple, price to equity has to be certain multiple, PEG ratio has to be of certain multiple.
Right.
So accordingly, your companies will keep on narrowing down. Then when to take enter is a little challenging stuff.
There we have to merge a few strategies, like technical,
Yeah, there we can.
fundamental plus technical mix करके.
We can do that.
Because from fundamental probably we can find out this particular stock is a good buy for long term.
Exactly.
First enter your exit technical से नहीं पता है.
Hmm.
क्योंकि अभी हम जो implement कर रहे हैं वो technical indicator वाले कर रहे हैं, तो they are very basic like RSIs, MACD.
Arey, the more you stick to basic, more returns you will get. I'm telling you.
अच्छा. इसके लिए मेरा तो data भी अलग देखना है.
और उनको तो अभी तक रीड करना है.
So I guess yes, this is about our first session, sir. Next session we will cover various topics like corporate actions and some portions of equity research. Because equity research itself will require some Excel ka modeling and all that stuff, which won't be possible in 2 to 3 hours.
Okay.
Because I need to make you understand drivers and all that stuff, which wouldn't be possible. But ठीक है, let's see theoretically whatever we can cover, we will try to cover that.
तो
Yeah.
अभी हम लोग ये वीक में ऐसा असाइनमेंट क्या होगा?
I can give you one see assignments. What I can give you is that go to the screener website, whatever, go through the balance sheet of at least 3 to 4 companies. Bajaj Auto, TVS, Hero Honda. Hero Honda is listed. Hero is listed, na? Hero is listed. Yeah.
वो होंडा अलग होगा.
हाँ, Hero Motocorp. Yes, yes. हाँ. So go to these 3 to 4 companies and try and see whether you can make sense. Which company is doing great? Which company? Look like what are the strengths and weakness of that company.
Okay.
This is on the fundamental side. On the option side, now since the NSE website is not working, which he has said that not possible right now. So I'm waiting that once it gets started, because then you will have to, you remember the futures assignment which I had given to you and the options ka thing. So you'll have to do that every day. Basically, you'll have to make a code wherein it pull the prices and open interest, and it does that calculation and it throws you the result, whether there is a long, fresh short, long unwinding or short covering.
देखना पड़ेगा क्योंकि I've used Selenium, which is like auto download. It is not web crawling. It is मतलब basically आप browser खोलोगे और download.
No, then it's not
Which
good.
is an automated. मतलब web crawling नहीं है. आप के behalf पे वो खोलता है वगैरह करता है. That is blocked by NSE.
Okay.
Selenium is blocked. There is one is pure web crawling, which is called Beautiful Soup. वो web HTML pages का data निकाल के लेके आता है.
So online guys, you can log off in case you don't have any questions. We are done for the day.
तो फिर एक बार ऑप्शन
Yep.
के डेटा के लिए वो देखेंगे ना, तो विल बी एबल टू फिगर आउट कि हो रहा है कि नहीं. अदरवाइज कैसे परचेज करना है.